Hi, this is Robert with Blockchain Education. We are going to start on a journey and show you how to trade futures from the very beginning. Okay, so we're going to use Binance as the platform. It's the one I know the best, so we're going to start here. This is the main page, and up at the top you have a lot of different selections, markets, trade, so forth. We're going to go to derivatives. Then we're going to go to USDM futures, which is your normal futures that you trade starting with either USDT or Binance's stablecoin BUSD. So click on that, and we are in, by default, Bitcoin against US dollar tether. This is where it will always automatically take you first, and I'm going to show you what everything is, how to use it, and how to become familiar with your journey on starting to trade futures. So first thing I want to look at is what's Bitcoin doing, because Bitcoin in many cases will determine whether an altcoin is going up or down. So the first thing I noticed is there's a pretty strong level of support right here. So that's the support level right there, and it's holding quite well. So we had a nice increase of about $2,500 from Friday up until I believe it was Sunday afternoon. So the best thing to do here is figure out where Bitcoin's going. Looks to me like it is either going to make a lower high and then eventually break this support line, or it's going to hold and just keep going up. Once it breaks above this area right here, which is the local support area, it's easily going to get up in here and either retest this high or break it. So a couple of different things. If this would have been a day or two ago, I could have told you exactly where Bitcoin's going. But anyway, let's get down to it. So first thing to know about futures is, with a couple of settings and the push of a button, you can instantly borrow money from the exchange. And you might say to yourself, well, why would they loan me money? They don't know who I am. Well, actually they do know who you are, because most exchanges, with a few exceptions, but most of them, you've already done your ID verify, which is called KYC, means know your customer, so they know who you are. But it's not based on your credit or anything else like that. It's based on how much they are going to increase your risk. So up here we have two modes. We have isolated and crossover. Crossover is if you're going to take out multiple trades that are all in play at the same time. It increases your risk because you can forfeit your other trades if you get liquidated in one trade. So I haven't really used crossover much. I use isolated, keep everything separated, and that way it's clear. So I use isolated mode. It changes it up here, so it's set on isolated. Once you have set isolated for a coin pair, it won't change back until you physically change it. So over here we have leverage. So it's set, I think, by default at 25x. I might have used 25x in the past, but here's the way to change it. You can trade all the way down to 1x, which means that unlike spot trading, you can trade a short with the price going down and actually make money. You would make the normal amount that it goes down. You're not increasing your position, so therefore you're not going to get liquidated. So basically, if I was going to trade 1x against Bitcoin, to go short, I would try to catch the top, I would trade it on the way down, and when it got to and established a level of support, I would sell it, and then go along and make money on the way up. So with 1x for every, say, $1,000 that you're trading, you're just trading that. You're not borrowing any money from the exchange. You're simply using the futures platform, and you're adding your ability to go short, because as you know, you can't go short in spot trading. So let's talk about some of the other settings. Let's say 10x. So with 10x leverage, how do you know what your liquidation price is going to be? Well, the answer is approximately your liquidation price is going to be about 10% the wrong way. So let's say you take out a long position here and you're using 10x leverage. Well, for every $1,000 you're trading with, you're borrowing another $9,000 from the exchange. So for $1,000, you're controlling $10,000 worth of Bitcoin. So that's a pretty good deal. What's the catch? The catch is, if it goes down by 10%, you get liquidated. So we're going to talk about stop losses too in a minute, which keep you from getting liquidated. But it's kind of like insurance. It costs money. It's a safety net. And if you end up using it, it costs money. So not a lot in comparison to the alternative of liquidation, where you lose all your money that is in the trade. So how to figure out how much, very quickly, how much leeway you have? Well, if you choose 5x, you can go 20% the wrong way, because your leverage is always multiplied from 100. So 100 divided by 5, sorry, not multiplied, divided. 100 divided by 5 is 20. 100 divided by 10 is 10. 100 divided by 25 is 4. So when you increase your leverage, you're borrowing instantly a lot more money, so to speak, from the exchange, but you're greatly increasing your risk. So with that said, many traders, when they are new, they start with 3x, because obviously 3x means 33% the wrong way, approximately. Let's say 30% just to be rounded off, because when you end up closing the trade, whether you take profit or your stop loss hit, there are fees involved. So they basically charge you a couple of different fees based on how much you are borrowing. So if you borrow a lot and you're doing like 50x or 100x, which is only for very select groups of people, really high risk and greatly increased chance of liquidation. If you're using even, say, 50x, well, you're borrowing 49 times more coin than you are working with. So why are the fees so high? Because you're not paying fees on your $1,000 to buy and sell. You are paying fees on $50,000 to buy and $50,000 to sell. So if you're going to use 50x, for example, you better make sure that you're catching the very tops or the very bottoms, because any FOMO is going to be magnified by 50 times, which makes for a really nervous, kind of a difficult trade for most people. So anyway, 3x is generally very safe for most coins. If you want to look at other altcoins that are in the USDT perpetual futures, you simply hover over here, hover the mouse, and make sure you're on USDM. And there's the entire list right there of all the coins. You can sort them by alpha order, You can sort them by last price, 24-hour losses or gains, which this is how I usually start out. If I'm interested in going long, which I usually am, I go to the coin list and I click once or twice to get the coins that have gone up the most. Well, I can tell you right now, Lina has definitely gone up the most, because I was just looking at that a bit ago, and I think it's pretty close to the top, if not at the top, because it's increased greatly. It could go higher, possibly, all the way up to about 33 to 35 cents. There is selling liquidity in that area, but you know, basically, if I was in the trade, I would have sold it a bit ago at, you know, at the top, at the last top. So the point I want to make is every coin has a different amount between the figures. So as you can see, this really started out at about 1,000.01, and it went all the way up to, you know, almost about 26. So it went up by 2.6x, and that's a lot. So whatever leverage you decide to use needs to be friendly, user-friendly with the numbers that you're looking at. So because these are such big areas between these numbers, we're talking 50% between here and here, and a smaller amount between here and here, but it's still a great deal. So we're looking at, I think 33% if I'm not mistaken. So in a situation like this, 3% is plenty. I mean, it's 3x is plenty of leverage. So anyway, that's how to navigate the coin list. You can also click here and check by volume. So there's a lot of ways to do it. If you're interested in trading against BUSD, which is Binance's stablecoin, you can just click here and it gives you all the BUSD pairs that are in perpetual futures. So also there is a calculator right over here that will allow you to enter. If you're going to go long, you can put in your entry price, your planned exit price, how many coins you're buying, and then move the sliding tool to whatever leverage you're using, and then that will help you calculate you know, where your liquidation price is going to be, especially because if you don't use this tool, you're not going to really know what your liquidation price will be without using a calculator. Of course, it shows it to you after you're in the trade. Liquidation price, that all shows up down here at the bottom of the screen in this area. So you'd have symbol, which is your coin pair, the size, how many units you bought, your entry price, current price is the mark price, and then the liquidation price would show up here. But that would be after the trade is physically executed, meaning you're in the trade. So hopefully this will get you started understanding futures on Binance. Now, if you're trading on Bybit, the screen is very similar to Binance's futures screen. There's very few things that are really that different. Most of it's the same. I think they just use the same template. So anyway, we'll wrap it up here, and stay tuned for the second part of Blockchain Education's Futures Education. Take care.